Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I am Yatin Mota.
Well, Yatin, same story once again. In the second half of the session, we saw profit booking kicking in.
Correct.
But, it's a good thing that we started the day with solid gains,
Correct.
200-point kind of an up move on the Nifty at the start of the day. But, towards the end of the session, we saw all the gains being shaved off. In fact, the Nifty ended largely flat, but, above that 20,500 mark. That's a good thing. But, yeah, 21,700 was what we managed to reclaim at the start of the session. But, of course, we managed to slip even below that 21,600 mark at the end of the session. Mid and small caps were on the gaining side as well, but they, these two indices already, saw some gains being paired. India VIX, we saw some easing, some bit of cooling off there as well. And if you look at the advanced decline ratio, earlier in the session, it was somewhere around 2.5:1. But towards the end of the session, it was almost somewhere around 1:1 or thereabouts. Among the sectoral movers, Realty and IT were the top performers. Realty, in fact, towards the end of the day, saw gains of somewhere around 2.5%. IT pack was buzzing. Of course, we saw Nasdaq rally over 2% last night. So, that rubbed off on the Indian IT pack as well. The likes of TCS, Infosys, HCL Tech, Wipro, all of these will be reporting numbers this week. And ahead of that, we saw good gains coming in on the IT pack. But what didn't do well, of course, the media pack led by Zee and the banks. Banks came under selling pressure in the second half once again, like yesterday, and ended the day in the red, both the PSU banking index as well as the Nifty Bank index. Talking about stocks, of course, Zee was a big drag today, although the stock did manage to pare its losses after the management's clarification on the merger with Sony. We'll be talking about that in greater details. Bajaj Auto buzzing. In fact, shares hit a fresh high in intraday trade after the board approved the 4,000 crore rupee share buyback. Aside of that, other gainers on the Nifty, you had the likes of Hero, Adani Ports continues to gain, Apollo Hospitals, SBI Life, as well as Bajaj Auto. On the flip side, FMCG names continue to languish. Had the likes of Britannia, Nestle, Asian Paints. In fact, even HDFC Bank and HDFC Life were among the top losers. Yatin, from the broader end of the markets, what are you picking up? Which are the stocks that caught your attention today?
So, if you look at the Nifty 500, on the back of the better toll collection, we had IRB infrastructure moving in trade. In fact, their December tolls were up nearly 26% in terms of collections, and that stock moved nearly 9% on the back of that data point. Obviously, the toll collection is for IRB Invit Trust, in which obviously IRB is also having a stake. JSW Energy, that stock moved 8%. NBCC and a couple of order wins for this company. They have been able to monetize their real estate well with the Amarpali Group projects, in which inventory worth over 2,500 crores was recently sold, and that stock is also in focus, moved nearly 7.5% higher. What was not doing well is Polycab, and media reports were suggesting that 200 crores worth of transaction between promoter entities, the company, were unaccounted for, and post that the stock dived nearly 9%. Obviously, the management clarified that there is no such communication from the income tax department. Idea, that stock was down 5.5%. Profit taking seen, and Compton Consumer as well as Alcargo, these were the two stocks also witnessing some bit of profit taking at high levels.
All right, of course, those were the movers and shakers in the mid-cap end of the markets. But on that note, let's take a look at the stocks that are on our radar this afternoon. Yatin, the first stock on my list is once again Bajaj Auto. Of course, we spoke about that stock yesterday ahead of the buyback announcement. And today, of course, the stock was reacting to that 4,000 crore rupee buyback, which is higher than what we saw last time. 2 years ago, 2,500 crore rupee worth of buyback happened. But that was via open market. This time around, they have taken the tender route in the buyback, wherein, shareholders will tender their shares for the buyback, and acceptance ratio according to Nuvama will be somewhere around 4 to 10%, for the retail shareholders, which is low given the fact that, promoters will also be participating in the buyback. And of course, let me also mention the share buyback price, 10,000 rupees per share, which is at a, 43% premium to yesterday's close price. So buyback price according to brokerages is very attractive, right. But the fact that promoters will also be participating and, the low acceptance ratio could be a dampener for retail shareholders. But management, in fact promoters rather, will be of the clear winners according to UBS, given the fact that they will get somewhere around 2,200 crore rupees, vis-a-vis the share buyback offer of 4,000 crore rupees. Right. In fact, UBS has issued a sell call on the stock, saying that, since promoters will be the clear beneficiaries of this buyback offer, it would be good to take some profits off the table here, because the stock, of course, has run up a fair bit, since the buyback announcement. In fact, the target price that UBS has set is somewhere around 5,600 rupees per share. Given the fact that the stock price has risen so much, but the market really doesn't, mind, given the fact that the shares hit a fresh high today as well. In fact, 7,400 is what, we saw in the intraday session when it came to the share prices. But 7,100 or thereabouts, that's the share price at the current juncture. So it was off day's high, but continues to sit pretty at 7,100, above that 7,000 mark. In fact, management was on CNBC TV 18 today, and they've said that, the promoter holding, even post the buyback, will not exceed 55%. Currently, they hold somewhere around 54.93% or thereabouts, Yatin. So, good going for Bajaj Auto. Of course, we've already discussed in details yesterday also how it has managed to outperform its peers like Hero and Eicher on a 1-year basis, and continues to room ahead in trade.
Absolutely, and Bajaj Auto, I think Nandita, the most important point is that the last buyback was almost 2,500 crores, and this buyback size is 4,000 crores, and not only that, the price is 10,000 rupees per share, which is quite decent given the current market price and the premium to that particular stock. But Nandita, Zee, that is one stock on my radar, because the stock plummeted nearly 10% in trade today after a Bloomberg report suggested that Sony as well as Zee's mega merger of $10 billion is at risk, and probably Sony, the Japanese management, is looking to call off the transaction. Obviously, there was no immediate clarification from Sony or Zee, but Zee post the afternoon lunchtime, they gave a clarification in which they said that the negotiations are still underway, and Zee's management is committed fully to the merger transaction, and they are looking forward to engage with Sony in order to extend the timelines of the merger as well as to complete the merger process. But I think the real part is that the Bloomberg story indicated that Sony's management is not keen that Punit Goenka continues as the CEO or in the management position of the new merged entity. Because of various things, there have been money siphoning allegations, there have been SEBI orders, there have been a lot of things which are, moving against the current promoter family of Zee. But given the fact that Zee's clarification was quite strong, stock did see an intraday recovery of 4-5%. But again, as the day progressed and the markets also moved slightly lower, the stock ended nearly 9%. In the red, but clearly, the timelines are quite near when it comes to the timeline extension.
20th Jan, I think, is when Sony has to, come.
And the important part is that Sony has not yet given the extension for the merger. Number one, neither have they reacted to these, media reports. So it is very important from the Sony side as well. What is their reaction to the news report? Are they looking to extend the timelines? Because the step one is to negotiate with the Indian promoter. Number two is to extend, the timelines of the merger deal. But this is something like guessing, a coin toss. You never know, what happens. But yes, the merger is a very delicate process and a very delicate timeline, as Nandita was mentioning. A few weeks from now, they will have to decide on the extension.
But I think the merger gains significance for both the sides, right? Given the fact that RIL, Disney are also exploring a merger, so there will be stiff competition going forward. So it's not only Zee that will benefit from the merger, even Sony stands to benefit, right? So so of course we will be closely watching out for what happens in this context. But aside of that, Yatin, the other stock on my list today is Nykaa. The stock has been on a gaining spree over the last 4 sessions. The stock has ended in the green. In fact, it came very close to the 200 rupee mark, Yatin. Important to note that the stock hasn't really been able to close above that 200 mark since November 2022. And now, given the fact that the Q3 update from the company is fairly strong, the street is also pretty bullish on this particular stock. Of course, it was already garnering good growth where its BPC or beauty and personal care segment is concerned. But now, given the fact that fashion segment is also seeing some recovery, that's something that could be rather the key driver for the stock going forward. In fact, in its third quarter update, the company has said that the fashion vertical gross merchandise value is expected to grow at around 40% on a YOY basis. This is something that stands out for me, given the fact that the company was struggling to spruce up its fashion segment. Aside of that, even the BPC vertical growth is expected to be in mid-20s. In fact, it is doing much better than the industry growth numbers as well. Aside of that, you have HSBC coming out with a report on Nykaa buy call target price of 250 rupees per share, and in fact even HSBC has pointed out that the company is well positioned to capture long-term value in the beauty and personal care segment with its scale as well as leadership. So yes, good going for Nykaa. Let's see how it really pans out, given the fact that over the last year Nykaa has managed to garner 20% kind of gains, even though other platform companies have done pretty well. If you look at the likes of Zomato, they have done much better than Nykaa. But let's see how third quarter numbers pan out. If fashion segment recovers, I think that could be the big trigger for Nykaa.
Especially when Q3 was a festive season, I think these companies have done well despite the fact that the rural market continues to lag for a lot of FMCG companies and consumer companies. But Nykaa being exposed to the urban markets well, I think they have probably got an advantage, especially on the GMV front, wherein they have posted strong double-digit growth.
Well, those were all the stocks on our radar this afternoon. But of course, if you have any comments, leave them in the comment section below and we'll take note of them. Of course, right now, thanks a lot for tuning in and watching Closing Bell. We'll be back with the markets tomorrow at 8:30 a.m. So don't forget to tune in for that. For now, it's a goodbye from me and Yatin. Stay tuned to Moneycontrol for all your other news and updates.